Welcome to our special guest interview and back for the second time by popular demand, Gary Shamis. Good day, Gary.
Good day.
Gary, last time we spoke about the managing partner priority list. You've been in this game a long time and we've got your bio and your background here in our show notes. You've been managing firms for a long, long time. You sold out. You're now training managing partners and through Winding River doing all kinds of great things, which we shared about on the last episode. What's changing in the accounting profession right now, Gary, and what kind of shape is it in?
Well, I don't know if what's changed is this whole element of this cultural side of it because of the pandemic and the virtual office. I mean, that's a big change, and I don't think we have that figured out yet. I think that's a work in progress for the profession. I wrote an article. It was in Accounting Today, and it was kind of crazy. We put this article on LinkedIn after we wrote it, and I had about 20,000 people look at it. I've written all kinds of stuff. If I have 300 people, I'm like, jumping and doing hula hoops. Here we had 20,000. And really what it was talking about was, I think the way I said it was, we all went to bed on March 16th, 2020, and we woke up, it was March 17th, 2030. And what happened was 10 years had passed in one day.
Yeah.
And there's no doubt, if you really think about it, from an evolutionary standpoint of what happened with technology and being able to use the resources that were there at the time the technology was available, there is no doubt that we would be today, where we are today in 2030. We just didn't expect to get there in 8 hours.
Yeah.
And that's really amazing. And it's a lot to take. And, I remember talking to so many firms, and so many firms were just like, they were just so proud of themselves for the ability to be able to do this overnight. And they were, but a lot of them just didn't really understand the cultural elements of how this is going to change. So I still think we're dealing with that. We're dealing with remote workers. We're dealing with virtual workers. We're dealing with, our ability to socialize like we used to. That actually goes into opportunities in terms of clients where you wouldn't have clients outside of your territory. Now you could. But there's just so many changes that have happened regarding that, which from a cultural standpoint, I think firms have to have a very open mind. I think we have to be in a learning type of thing. And maybe to a certain extent, we have to be in an element where we're willing to try some things just to see if they would work or not. But that's really been huge. The other element that is I'd say the pace of what's happened in the United States in terms of the mergers and acquisition side of it. Every year I talk with my good buddy who does most of the M&A here, Alan Colton. And every year it's kind of like, it'll never happen like it did again last year. And, here we are, 8 years out, and it just continues going and accelerating at a different pace right now.
But there's so much change, but there's so many drivers of change. We haven't really talked about technology, and this is the second interview we've done together. There's lots of emerging technologies and the private equity money coming into the world now in accounting. There's a lot to say about that.
Yeah, well, the private equity is, to me, that's really interesting. It's really interesting because I think what you need to do is you need to look at history. I'm not sure that they've looked at history as much as they have, or maybe they should. I'm probably wrong. These guys are pretty thorough in terms of what.
Well, accounting history, they've done it the same way for hundreds of years, Gary, haven't they?
Yeah,
Profit
but
and loss.
in the States in the 1990s, I mean, what happened was we saw this consolidation that ended up in where you had really H&R Block, you had American Express, and you had a company called CBiz. Those three companies successfully put together a consolidation of accounting firms, really looking with a public type of platform to do so. American Express, they're gone. H&R, they're gone. Both of those folded into RSM. So RSM, that's where they got most of their bandwidth from, was the failures of those in trying to do it. CBiz is still around. But if you need to really look at CBiz, I think, to have a good understanding as to where firms need to focus on going forward, and the private equity. And if you look at private equity and you look at public companies, I mean, what you see is the same thing. They're looking to satisfy their shareholders, and how do they satisfy their shareholders? Either with current earnings or with they sell it to somebody else, okay, and to enhance the earnings that are there. So the challenge is you take something that's been around for a long time, 100 years plus, and doing it one way, and how do you enhance the earnings, okay, within these organizations, okay, that acquired it, to want to go public, to satisfy shareholders to invest, or to sell it down the road to somebody else. And that's the real challenge. So go back and look at CBIZ when they first started. CBIZ was a consolidation of almost all accounting firms. I think there may have been 100 of them, relatively small firms. And they amassed to maybe a $200 or $300 or $400 million accounting firm. Okay. That stock stayed the same forever. $7 a share, didn't move, went down to $2 a share. Now it's selling at $43 a share. Okay. Look at CBIZ today. CBIZ today is a $1.2 billion company that is driven by advisory service. It is not driven by accounting firms. So I think CBIZ figured out the accountants maybe were the distribution model, but they weren't the profit model. So when you look at these private equities, you just have to think, in order for them to be successful, they have to derive additional profits. And where are they going to derive them from? They really have to derive them from advisory. It's hard to do it from accounting because it's a personal service business. Rob Brown goes, he works really hard. He brings in all these clients. He makes this money. And it's like, well, I provided the service. I get paid for it. Or do we siphon off a portion of that and move it to somebody else, who's invested in us? So a lot of it just becomes this ability to use technology, to use money, to use human capital in a way that's going to be more profitable than what firms are today. I think CBIZ proved that. Again, looking at them today, I think their accounting firm today could be $400 million, and $800 million is coming through add-on advisory services.
It's a crazy world. And we've got a situation here where you've coined this phrase before, Gary, that the accounting practices are boomer owned and millennial compromised. Talk to us a little bit about that and how that's affecting the consolidation going on.
Oh, well, in my mind, that's the number one reason for consolidation. So you're looking to say firms, you have to have an exit strategy. So until until the mid 90s, there was potentially some consolidation there. Again, maybe that didn't work or not. But what was the typical exit strategy? The typical exit strategy is you would sell the firm to younger people within the organization if you were smart. That's how I bought my dad out. Okay. And my firm was all aligned to have another generation of people buy us out. Okay. Now it didn't happen, and we could talk about that, but it didn't, but that was what we were trying to do. And for every partner I had 33 partners at the end. I mean, how many young people did I have to get to place to buy out those 33 partners? So that was the model. Okay. Now, what impacted that model was this millennial culture and this whole idea of my friend Rebecca Ryan's book entitled "Live First, Work Second." And this was a book about millennials. And you go to the baby boomers and you say, if you wrote the same book, what would it be? And they all laugh and they say the name of the book would be "Work First, Live Second." Mm-hmm. So you see these millennials who are setting themselves up to take your firm, and they're saying, do I really want to do that? Do I really want to work all those hours? Do I really want to not go to the soccer games? Do I really want to be not being there for my family? And the answer is no. Now, the challenge is they want all the benefits as well, too, of being the partner. They want the money, they want the prestige, but they just don't want to work as hard. And
they don't want to pay for your retirement either, do they, Gary?
Well, pay for your retirement as well, too. I mean, but the element is that if you're smart and you're running these firms, the people you're going to have to buy it from you've got to set it up so they're going to want to buy it. And what does that mean? That means the culture's got to be a millennial culture. That's going to be the amount that they're going to pay for it's going to have to be within reason. So where this really became challenging is firms that didn't get it. Let me tell you an anecdote of a firm that I was working with when I first started the consulting firm. And it was a firm it was in the Midwest, very, very, very successful firm. And one of the partners called me and they said, we need you to come here. We need help. Well, what's the help? Well, we had the succession plan totally worked out. It was perfect. And then all of a sudden what happened is everybody we had in line for the succession plan has quit and gone somewhere else.
Wow.
So had me in, you know the answer pretty quickly. And this is something that's not new for me. I've been believing this for a long time. I walked around their offices. I talked about the firm, incredibly profitable firm. They worked really hard. But what happened was they created a culture that was a millennial culture. These 3 people or 4 people said, I don't want to be here. I'm going to find a millennial culture. They were shocked when they left. So I went to the managing partner and or the partner group, and they said, well, what's the solution? I said, well, the solution is you guys have to build a millennial culture, one that's not going to be as demanding. It's going to fit what they want to do. And I remember the managing partner, he goes and he slams his fist on the desk. He says, there's no way I'm going to do it. I'm going to find people exactly like us. And they're out of business now.
Good luck with that. Yeah.
because he couldn't find them. So what's happened is a lot of firms don't get it, don't know how to do it, or won't do it. And then you're finding firms that are smaller firms are dependent upon potentially someone buying them out internally. They can't find the people to do it. So what you're seeing is them trying to sell it to the larger firms and like kick it down the road, get some kind of economics base back for their practice. And it's not like this is happening to one firm in the United States. This is happening to 10,000 firms in the United States. So thus you could see just the amount of firms that are just not in this place. So within every city, you find these firms that have 10, 15 people, successful firms, but with no real strategy to exit the firm going forward. And the only thing that's really left to sell somebody else.
So Gary,
and what we're seeing also, just one more thing on that is we're seeing a depression of the pricing on that too, because the value is not there. What are we buying now?
Mm-hmm. Can we say with any certainty that the traditional accounting firm hierarchy, equity model, partner model is broken?
It's changing. I mean, I'd say it was perfect until 10 years ago. Now I would say it's changing, and whether firms, and for some firms it will still work, but for a lot of firms it doesn't work. And that's where you're seeing is this private equity thing going to be able to work out? Or are we going to be able to still compensate and bring in talent and give them enough for really good, talented people to want to come with us in this new model? And I think that's the second challenge within this model. The first is to create the profitability to drive the private equity who's not doing this, to be nice. They're doing it to make a lot of money. So how do you make more money out of it? But you can't make this money, as we all know, because this is a professional service. This is a people business without the right people. So is your model going to be there to be able to attract the best talent possible at the same time? And I think time is going to be telling. And all I could hope is that these private equities, have at least an idea how they want to work this thing through.
Well, what's appealing to a PE organization is the monthly recurring revenue from a service that is mandated by law. So there's always going to be a need for a compliance and accounting services. So that money comes in every month. It's a very elegant business model. If you can leverage that, there's some skin in the game.
I mean, let me bingo. You're 100% right. that is the number one attractor for the private equity looking at this space.
Yeah.
Number one attraction is to the recurring revenue. That is absolutely it. They love it. I used to always tell people, it's the best business in the world. You go and you do something for somebody. If you do a good job at it, they're going to come buy the same thing from you for the 30 years in a row.
It's a subscription economy, Gary, isn't it?
It's amazing type business. You look at the lawyers, and the lawyers, it depends upon cases. They don't have that kind of they don't have that kind of recurring business all the time. So that's the number one attraction from private equity. Now, what that does is, you're absolutely right. That gives you a tremendous foundation, but the success is going to be based upon what you can add to that foundation, and how you can make it better. And that's what I think is going to be advisory services. Because if you take that individual tax return, and because private equity is there, you're not going to be able to spend any more money on it. You're not going to raise the prices on it. No, where you can do well on it is now you can sell them a wealth management service or insurance or something like that.
Can you see the death of managing partners and the birth of CEOs in professional service firms?
I would look at that a little bit differently. I wouldn't say the birth of CEOs. I would say, and this is not new, I would say the evolution of the C-suite.
Okay.
Starting to run these firms more professionally.
Yeah.
When I had my firm, we had one of our advisors was the managing partner for Jones Day, which is an international law firm, used to be headquartered in Cleveland, where I was from. He was incredibly valuable to me in terms of what I could learn from him. And, that was one of the first things, we talked about when he looked at Jones Day, and he said, we really started becoming successful when we had really professional management. So, sometimes, now you're talking about who fits into professional management. Can you do that with a CPA running the firm? Yeah, of course you can if you have the right CPA, but you could also do it with a non-CPA as well too in running the business. And then you get the whole ideas of a chief financial officer, a chief marketing officer. So I think this evolution of the C-suite and running it more like a business, I think is a huge shift, especially for larger firms.
Mhm.
That's the way in my opinion, that's the way they should be professionally run and managed.
We're straight into the future now, Gary, and I want to ask you to get your crystal ball out. And you've seen so many trends and changes, some of which you couldn't have predicted. But what do you feel is coming up in the next 5 to 10 years for the accounting profession? You'll be still going in that time, Gary. You'll still be doing it.
Oh yeah, for sure. Yeah. One of the big elements, and I don't know what this is like on an international basis, but there's a huge element in the United States, and it has to do with something that people don't like talking about, and that's the whole idea of diversity, equity, and inclusion.
Okay.
And if you look at the accounting firm in the United States, what you find for the most part is a Caucasian, high percentage of Caucasian players in this game.
You've gone and opened the diversity box now. We've had Anton Lewis on, Professor Anton Lewis, talking about the predominance of white supremacy in accounting and where are the black accountants. So you're definitely hitting a hot topic here, Gary. Talk more.
Yes. So, what happens in the United States, I laugh at it. My firm, we had the highest percentage of women partners of any top 100 firm in the country. And along the way, we had the highest percentage of women leadership of any firm in the country. I was really proud of that. I was really proud of what
was it double digit?
Oh yes, it was
okay.
Far away double digit.
Well, the benchmark's quite low, Gary. Is my
yeah,
point.
I mean, our women partners was 40% of the firm, and
Okay.
senior leadership was 40%. And then in our ranks, females were 55%, 60%.
That's very good. That's unusual though.
But regardless, that was part of our strategy. Being suburban, we'd like to get women who used to work for the big eight who they didn't want to go downtown anymore. We were able to give them, better positioning. So, all that kind of stuff kind of played well for us in terms of that. But when you do that, so you go to accounting firms today and they boast upon their women. Oh, well, we have all these women. We're diverse. We have all these women, and it's just bull. I mean. We're the blacks. I mean, we're the United States. We're the Hispanics. Okay. Where's that whole element? And when you will look at it, what you see is from if you just take the demographics of where the United States is today and where it's heading, and you compare that against the accounting firm, all you see is there's big problems. And firms have really got to be able to understand how to educate and be able to just, it's going to end up being a derivative of what your country looks like. So that's a big issue going forward. And I think in the United States, the United States has failed miserably at that, really miserably, in terms of their ability to be successful there. How do you be successful? I will tell you, if you focus on it, you can be successful. At my little firm, we had 575 people. We were like the United Nations. We had people from Russia. We had Ukrainians. We had people from really all over the world. We had a significant amount of black accounts. So we really focused on it. So I think you can do that if you really work at it, rather than just kind of kick it down the can. But it certainly would be better if, if your international associations, they're the ones who are representing you, could do a better job. I know that they've made some efforts, but I don't think they've really gotten the results that are really successful.
Well, let's call them out for sure on being the voice of the profession, but you weren't being diverse in your approach to tick a box, Gary. You obviously saw some economic uplift of diversity in your firm and what those female partners were bringing to the table, didn't you? Well,
it's just the way I think. I mean, I never saw a difference. I just never saw a difference.
You just went for the best people for the role.
Yeah, right. And we saw opportunity. And I just was briefly kind of saying was, there was a point in time, I'm going back, I've been doing this a long time, but there was a point in time, I would say in the 80s and early 90s, that if you were a woman and you were working for a big eight accounting firm and you had a baby, your career was stalled.
Yeah.
Okay. They didn't know what to do with you, And what happened was we became suburban. One woman in particular came to work with me, a woman named Patty Rubin. She was great. She was bright. She had a kid and she couldn't figure it out. And Price Waterhouse told her, oh, we're going to figure it out. And she didn't believe him. And she ended up approaching, and I talked to her and I said, we would figure it out. She had a 30-year career with me and she became the model for people working for us. So we started saying, well, if they're not going to want these really talented people, there's no reason we can't do that. Mm-hmm. So what did that mean? It means we had part-time partners. We had to adjust schedules. We had to figure all that out. That was the cultural, difference we had. Now the world has caught up with that, I think, to a significant degree with respect to the women's side of it. But we still have these hurdles in terms of people of color.
Yeah, I get that. And final thoughts, Gary, what's coming up with private equity and M&A activity in the accounting world over the next few years? Where we're going to end up?
So, well, M&A is going to continue because of the baby boomer stuff we talked about.
And this is not just the small firms, is it? We've seen really big firms now that are getting around the table and merging.
Right. Yeah. Well, definitely. There are,
and that maybe Colton's brokering those deals.
Yeah, and that gets back to what we were talking maybe a little about before. What I think it was on this one in terms of about brand recognition. Mm-hmm. The bigger you are, you do have a chance to create a brand. So a lot of these firms like Dixon Hughes and BKD Hero Emerging, they're going to be a $1.5 billion firm. A lot of this is based upon the brand for talents. Their ability to really have a national brand, where before it was just more challenging to do it. The private equity side, I think, is still very challenging. In order to get the private equity interested in the beginning, you have to have firms that are incredibly profitable. I don't think most firms are profitable enough for private equity, because what private equity is basically saying is, I'm going to give you money for cash flow, but then I have to enhance the cash flow. So that first question is, how many firms can give money? So if the average partner is making $300,000, can they give some of that cash flow for a one-time hit of that infusion of money to buy the firm? So they have to work that through. But usually you're finding, I think, the private equity deals that are going to be the more successful ones, where you have the partners who are making $1 million and say, yeah, I could live on 700. Here's 300. Now you have a piece of what I'm doing. And then on top of that, invest and see if we can grow it from there. So I think the audience is going to be limited. But nonetheless, I think what we're seeing a tremendous amount of interest because it's there. And you're seeing, you got 44,000 CPA firms and 3,000 private equities who were stalled, a lot of them because they can't spend as much money. So now there's 3 deals that were done at the top 100 firms in the United States. So now every private equity is, looking at this and saying, hey, is there a spot for me? So there's a lot of interest at this point in time. I just think it's going to be a couple of years to see if they could be successful or not in really ratcheting up the income.
If I took you back 30, 40 years, Gary, would you still come into accounting?
Yeah, I would. I think I do some private equity stuff right now, which I kind of like, and it's kind of fun. I think I'm good with growing businesses. But I don't mean to this, I guess I do mean this in somewhat of a derogatory way. People used to come to me over my whole life, and I live in a city called Cleveland, Ohio, best known for the Rock and Roll Hall of Fame.
Yeah.
And it's a nice city. It's a Midwestern city. The population in the whole region is a couple million people, and we have great arts, and we're on a great lakes, and it's a nice place to live. But it's not in favor anymore. It's not sunny. It's not California. It's not Florida. Our weather's a little bit challenging. So the place I've been has been always had just headwinds, no tailwinds. And I was able to grow this firm from Cleveland, Ohio to the 37th largest firm in the United States. So people said, how'd you do that? I said, well, when you're competing against CPAs, it's not that hard. And that's kind of, where I was at. I think I was really a good accountant, and I liked figuring things out, and I liked helping clients. But the reality was I was a better businessman than I was an accountant. And I happened to find myself in an industry that you would think would have great business people, but they just didn't. It was the contrary. So firms that are really good, firms that can execute, firms that are really smart can do really, really well. So
Gary Shamis, it's been an honor. Thank you so much for sharing your stories and your insights today.
You're welcome.
You've been watching or listening to the Accounting Influencers podcast featuring hosts Rob Brown and Martin Bissett with key interviews, what's working in the accounting profession, and news from the accounting and fintech world that helps you do your jobs better. We go out to 144 countries, over 20,000 unique listeners with 100,000 downloads, and it is accredited for continued professional education and development. Thank you for tuning in.